Awesome. Garrett Byrd here, Storage Authority franchise. We help busy professionals. We guide them through finding land, getting approvals, getting through development, and more importantly, running a premier facility once they're up and running. But we have Nick Collins. Now, first, I want to say, thank you to Nick for all the loans that your bank has provided to our franchisee. It's been an extreme big help. But can you tell us a little bit about your background, your bank?
Sure. I've been a commercial lender for my bank, Bank 59, for roughly 12 years. We're the second oldest bank in the state of Wisconsin. However, I have specialized in nationwide self-storage for the last 10. So even though we're a small community bank, we do have a nationwide reach for self-storage. So we've ridden the wave and seen the industry really change over the last decade.
Absolutely. I think you were telling me before, aren't you guys like almost like the number one leader in 504 loans?
Yeah, 2022, we're number 2 in the country and behind JP Morgan Chase. So not too bad for a 14 branch community bank.
That's impressive. That's impressive. Well, I'll jump right into the big elephant in the room, as the Fed keeps raising the rates. How's it impacting self-storage loans?
So for new development loans and some of the people that you're be dealing with new construction, it's been a really challenge this year because after we've underwritten a deal, gotten an appraisal, kind of gone down that path to get towards the closing, we've almost had to loop back and make sure deals still pencil out. So from that standpoint, just making sure deals still cash flow when they need to in the rising interest rate environment has been really challenging. So that coupled with construction costs increasing, it's been challenging for this year for new construction deals.
Yeah, and I know you specialize in SBA loans, and honestly, correct me if I'm wrong, the SBA loan product only came to the self-storage industry 10 or 12 years ago. But what's the big advantage of SBA loan versus conventional?
So I would say first and foremost, a normal bank loan would put a lot of pressure and spotlight on someone having management experience or having past ownership of self-storage, where the SBA programs are really tailored to get people into business. So it really helps someone that may have not owned a rental property, has no management experience, and can really get first-time owners or buyers into the market. So I think that's the biggest benefit of doing it. Another benefit, smaller down payments. So with the 7A or the 504, you're looking at 10% to 15%. And then fast forward, I mean, if you get a couple years under your belt and you want to expand your business or add on to a current facility, as long as the math works, I mean, sometimes you can do it with no money down or use the equity that you've already built up. So I think that's a really high benefit as opposed to 20 to 30% down with a normal bank loan. And then also for construction deals, there's longer interest only periods. So you can go out to 36 months interest only to build a facility and to lease it up. So I think that's a highlight for new construction deals as well.
It's nice. Yeah. We always like to say, with the SBA, to our owners, our franchise owners, it's, we always even talking 15%. I know you can, possibly do some at 10%, but it's either 15% down, they're usually deploying $1 million or better. Or if you're going 35% down and you have to have the carrying costs, you could be in that $2 to $3 million range.
Correct.
What's the differences, big advantages of, I know for us, we used to always kind of lean on the 7A. It does have that $5 million ceiling, but we like that you can roll your working capital into it. So can you share a little bit about the difference of the 504 and the 7A?
Sure. So as you mentioned before, the 7A has a 10% down payment. However, that is capped at $5 million. You can do 36 months interest only for a new construction deal. You can roll in most of like the startup costs, interest carry to make the payments while you build and lease up. And then that ends up being like a 25-year amortization, where the 504 program, you can go over $5 million. You can do multiple large deals. It would be 15% down as opposed to 10. The kicker is interest carry can only be rolled into the 504 package up until the point that the facility is completed. But to combat that, what we normally do at our bank is we'll do a smaller 7A to bridge the payment gap. So once construction's done up until the month that you project to hit break even, we can capitalize that as well. So at our bank, we try to make sure that you're fully capitalized the whole way, whether that's 7A or 504. And then the real big highlight with the 504 is a portion of the debt's fixed for 25 years. So with rates going up this year, a lot of people have liked that program to lock in 35 to 40% of the overall package, fixed rate, 25 years the whole time. And then my bank, on half of the debt, we do a 30-year amortization, and then usually, fixed floating. We can get creative with whatever rate the borrower feels comfortable with.
Yeah, that's awesome. And I think you kind of covered a little bit of what I wanted to ask next with, self-storage loans getting into that $5 to $10 million range. You guys are kind of using a hybrid of the 504 and the 7A. I think you kind of explained that. Is the 504 always the base, and then the 7A can be that additional working capital?
Yeah, we really only use a 7A with the companion loan just to bridge startup costs that may not be eligible in the 504 package, and then mostly interest payments on the debt. So it's almost like a payment bridge to couple with the 504 program.
Nice, nice. How about for, again, at Storage Authority, we're working with busy professionals and have done extremely well for themselves. And, they're in position where they have $1 million plus to deploy. But what's like a typical candidate look like for your bank that you guys want to loan to?
Well, we typically look at a few things up front. So as long as someone has a credit score over 640, doesn't have any, glaring criminal record backgrounds, no back taxes, tax liens, things of that nature. I mean, it certainly helps if someone has some background in owning a rental property, owning storage, some type of management from that standpoint, but it's not a requirement, but it certainly does help. And then a lot of it comes down to how people are structuring their entities that are involved. I think the biggest wave lately has been, investment pockets of people where you collect funds and everyone gets, 5% ownership. We really need someone to have 20% ownership and guarantee the deal, because I don't want to take back a bad deal just as much as the owners don't. But I mean, someone has to kind of quarterback it, make sure that it stays on track. So I think a lot of it just making sure that the entities are structured correctly and that the people have the down payment and liquidity to cover any shortfalls.
Yeah, and I think, you pointed this out before, anybody that's 20% more on the loan, that it is a fully recourse loan, correct?
Correct. But I will echo, in the 10 years of doing storage, we've never had to foreclose on one. So knock on wood, it should never really come into effect.
It goes back to, self-storage being, one of the least failure rate real estate assets out there. So
Right.
that's awesome. How about, we were talking this a little bit before the call. How about for, a candidate to come to you, and we get this question all the time, like, hey, how do I get pre-approved for a loan so I know I can get one? We kind of discussed this earlier, but you can touch on that.
Sure. I mean, from a project standpoint, it's really challenging for someone in my shoes to kind of give someone the full pre-approval, because so much comes down to the project itself with deal size, unit mix, construction costs. So it's really hard to know how much a candidate would need to borrow, but I can certainly take a look at someone's personal wherewithal and run a credit report, make sure they kind of have the liquidity available, and would be someone that could qualify. But to get like a commitment letter or a real hard term sheet, we'd really want to see, hey, this is what we're going to build. These are the costs. And then that way I can back into the loan amount and the candidate can do an accurate business plan with projections. So it's kind of a horse and, chicken and an egg type of situation, but we really want to see kind of what you're going to build and what the costs are going to be.
Yeah, no, and honestly, that's what we tell a lot of our storage authority owners. You need the capital, you're 15% down, and you don't need immediate income from the facility, but the bank's still going to need to you bring them a passable feasibility study just so it all hits the check boxes there. So that's the big thing that a lot of our owners going through the discovery with us even are asking us. How about you see any glaring disqualifiers? Anybody going to go for a self-storage loan?
I mean, I think that kind of echoes back to some of the things that we vet. Just making sure that no one's got any, tax issues. They're up to date on filing their tax returns. No criminal records, a credit
Right.
score that isn't going to make you not qualify, and then just making sure that they might need an outside job to make sure they're covering their personal expenses. I mean, a lot of people are trying to retire and build a facility, which is fine, but just making sure that we're not putting anyone in a bad spot on a personal level and make sure that they can cover their personal expenses as well.
Yeah, and honestly, we get that question, often as well. Like, hey, maybe they just sold their business and they're sitting on 2 million, but now their income's gone, and they always ask that, like, oh, I'm good. I got a lot of capital in the bank, but it's still nice to see that they can sustain their own, cost of living and have a little bit of income coming in.
Right.
How about for when you're now that they went through the approvals, do you ever see or what are some examples of you seeing loans getting denied? Is it just basically it's not checking the boxes with revenue or
A couple different things can surface. One, just kind of going back to what we talked about earlier with interest rates. I mean, when we underwrite a deal, I mean, in March, the prime lending rate was 3.5. Now it's 7%. So if we started looking at a deal a couple months ago and underwrote it at interest rate X, now we have to come back and update that. Some projects aren't penciling out based on construction costs and market rents. So just making sure that the deal is going to cash flow at a certain point. It's going to, our number one thing right now. And then a lot of issues actually arise with people have a good feeling that they're going to get stamp plans and permits from the municipality. So we can start underwriting a deal in unison with that process. But I've had a few where the votes don't come and the planning commission turns down the deal. So getting all the proper municipality approvals is a huge aspect of this as well.
yeah, no, it is. It's and for whatever reason we're seeing in some states the whole approval process, it's just snail slow right now too.
Mhm.
How about, again, going back to our owners, our storage authority owners, most of them don't really have any kind of development or self-storage experience. So they're leaning on our model, to be that experience for them. How important is it for you as you're going through underwriting, for either them to either have experience through development and operating self-storage or at least have that on their team?
So from an experience standpoint, I would say it's not that big of a deal, but your team is going to be the most important. So to have, someone like you or anyone on your staff to help with like the projections, the business plan, getting all the modeling accurate is huge because then we can use those numbers for our underwriting and vet that and make sure that it's accurate. And then really just getting like a local, civil engineer that knows how to navigate the approval process, local general contractor, just anyone that has local ties that, you're not going to get messed around with out of state contractors, out of state engineers that may not know how to get things through the local municipality level.
Yeah, that's honestly one of the advantages with us, with Mark Gooden, who's the CEO of Storage Authority. Now he's a civil engineer at Trey for 30 plus years, been building, design, and consulting in our space. But we still have to always lean on that local civil engineer of whatever state it is. But it's nice that they speak the same language. But it's
Right.
very important to have that team member on your team. How about for, I'm sure you get this, asked often, the rates for the bank, what can somebody expect? I know it's all fluid now with how things have been going up, but what's a typical rate that somebody can expect in today's market?
Well, I mean, it depends on what program, and I'm not trying to skirt the question, but it's hard to say. It means a deal to deal basis, but we generally price our SBA loans off of prime, and with prime at 7, I'd say somewhere over 7 at this point in time.
Right. Yeah, I mean, and a lot of our owners even getting in today, they're probably not going to come to the market for 24 months. So it could be a whole new landscape,
Yeah.
So you just, Mark built a couple of his facilities back in '09. I think the interest rates then were 8%. So, it's all a moving target right now. How about, are these rates locked in? Are they adjustable?
So with the 7A programs, we can get creative. We do fixed and floating structures. Like I mentioned before, the 504, 35 to 40% of that has a 25-year fixed rate. And then we usually do fixed rates on the bank portion as well. Now, we have ran into some people that they don't want to lock in right now, thinking that we've reached peak. We're more than happy to look at floating too. So I would say we can get as creative as we need to and structure any debt properly, to as long as it makes sense for the bank, the borrower, and the project. So I mean, there's a lot of options out there.
How about the loan process? How long does that take? You know, when do anybody who's going to develop self-storage, when do they need to start reaching out to you and creating those relationships? And but now, you know, approval wise, you know, I got the approvals. How long does that process take?
So as long as you have all the approvals and like the land lined up, so if you own the land or have it under contract, we can certainly start putting it together at that point in time. And then I can usually get a deal to underwriting and out to my boss for approval, usually within 7 to 10 business days. And then we would have to order the appraisal, title insurance, line up all the third-party reports. That process can take usually anywhere between 60 and 90 business days, depending on how many snags or hurdles that we run into.
Right. Yeah, and I know, and I appreciate this. A lot of our owners going through discovery with us, you know, we usually introduce you to them so they can ask, you know, have a 10-15 minute call and just ask those questions that better off we don't answer from them. They hear it from you, but you know, a lot of times they just want peace of mind. Like, all right, I do have a lender on my team when I'm ready. You know, that's the big thing. You know, the big question, obviously now, you know, from the lender's perspective, you know, with the rates going up, is now a good time to develop?
So it's a great question. Again, it's kind of a deal to deal basis. Some people that own land as opposed to having to buy land, I mean, deals of that nature, it's such a smaller a debt service to cover. So it really comes down to total budget and what market you're in. Obviously, land in the Midwest is going to be a lot cheaper than California or on the East Coast. So as long as the project numbers make sense, we're still seeing deals come through just as regular as it was when rates were lower. It's just sometimes for underwriting, we have to stress test the interest rates and just make sure that if rates keep going up, by the time we close, this deal still makes sense. But I still think there's a lot of opportunity out there. It just depends on the numbers with construction and land.
Yeah, no, I mean, we always say like the best time to build was 5 years ago, and the second
Yeah.
best time is right now. But in these uncertain times, it is, you know, the rates going up, you have fears of recession, but it's really going to be the ones that forge ahead. And like you said, it has to check all the boxes, and you know, you can't just build it just because it's got to be a good deal on the land. You got a good deal through the construction, and the revenue's got to check out. So, I mean, that's really what, you know, we're all about helping them, you know, guide them through A to Z from you know, beginning to find the land to developments. Obviously, you know, you're building a mini Walmart, if you will, you know, and with self-storage, but it's a great real estate asset to own. You know, we definitely, we appreciate, you know, everything you've done and your bank has done for our owners. How about, you know, anybody listening to this, where can they find you? How do they get a hold of you? I'm going to put your information in the comments below as well, like your phone number and email. Is there
Okay.
anything that, you know, call or what do you recommend for somebody that wants to reach out and have some questions for you?
Yeah, I mean, if you put up my contact information, anyone that's watching this, feel free to reach out. I mean, I could try to get you a underwriting checklist, kind of explain all the things we look at, get you any templates that you might need for doing projections, business plans, anything that we would need or any bank would need. I mean, I'm more than willing to help anybody that wants more information on this.
Awesome. Well, once again, Nick, definitely appreciate everything you've done for the storage authority owners, and you know, look forward to doing much business down the road with you as well.
Absolutely. I appreciate it. Thank you so
All right.
much.
Take care.
Bye.